right, we are back. My name is Russell Faucette, broker of Omada Real Estate and owner of the Stern team, here with Mandi Henriod of Wise Home Lending. And yesterday I went on the radio station. I was on KSL, and we talked about, they had an article that said in Utah, for the average person, that it would take 24 years to save for a down payment. And although, like, if you're saving for 20% down, that could be true, but I don't like when the media honestly pushes stuff like that, because it's like, since home ownership's not a possibility.
Right. It makes it seem that much less possible when it is extremely possible. And this is very similar to what we talked about last week, where we were like, if you are waiting to save up a 20% down payment, what you will lose in appreciation on the property, right? You're chasing a never-ending goal, right? So there's so many ways to get into your first home without, tens of thousands of dollars. Yeah.
So if I came to you and was like, okay, I'm a first-time home buyer, I'll even talk about kind of a little bit about my situation when I bought my home. I've got $2,000 in savings. I want to buy a house.
Yeah.
Where do we go?
Okay, so here's the thing. There are a lot of options for actually even no down payment. Utah has a bond program that is very aggressive, does 100% financing. It will finance your first mortgage. It'll finance it as a second mortgage, your down payment, and part of your closing costs. So in that scenario, you could literally have no money into a property, depending on the negotiations of the home.
Yeah.
Now, the thing that I always say, big old disclaimer, because you just said $2,000, right?
Right.
I want my clients to have a little bit of money in the bank and probably more than $2,000. Let's call it $5,000, because in a perfect world, I'd love for you to have your first payment, even though you are going to skip a month of payment when you buy a house. I'd love for you to have your first payment. You will need money for an earnest money deposit, which it's like a good faith deposit on the house when you go under contract. Under that bond loan, you can get that money back at closing, but you're still going to need to have access to it up front. You're going to have an expense of a home inspection, which is a good investment. You want to know what you're getting into, right?
Yeah.
And you're going to have the expense of an appraisal up front. So there's a few things that you need to have a little bit to work with up front, but you don't need a ton. You don't need a ton. And you really could, say you put $1,000 in earnest money, you actually could get that back at closing using that program. Okay. Now, say you have a small down payment. Say you have a 3% down payment. And let's talk about where those can come from, because I think this is important. We run into this all the time. They can come from a 401k. They can come from a Roth IRA. They can come from a gift from family. Believe it or not, we see a lot of those things, and most people don't realize that they can take a loan against their 401k for a 3% or a 3.5% down payment, get amazing terms, right? Get the best terms possible. And when you're paying that back, you're just paying yourself back.
So they're not liquidating their 401k.
They take a loan against it.
They take a loan against it. Mm-hmm. Okay.
So you can typically, you have to talk to your administrator, but you can typically take up to 50% of the value of your 401k in the form of a loan with no penalty for home ownership. So this is the thing that people don't realize. Like, there are ways to tap into money that you maybe have been setting aside behind the scenes. And most people, our portfolios aren't performing that well anyway, so might as well dump it into real estate.
Might as well earn a couple percent back on yourself that you would have paid anyways.
Right, exactly. So this idea that you have to wait years and years to come up with all this money, I think it's an unfortunate narrative, because I think it's probably stopping a lot of people from getting into their home, and rents are going to keep going up. I'm hearing it more and more with my clients who are investors. They understand that they can charge more, and they will be charging more.
Yeah. So, unique situation that I came across this week, talking with actually a family member, is out of their paycheck, they put some money in cash just to hold it in a safe for emergency purposes. Can they use that as a down payment, or what would be the proper way to be able to document that, like, this is cash from my paychecks, not from
I love this question so much, because I'm such a mom these days, I'm kind of oldish, and I'm such a mom. If you heard how many times a week I'm like, Stop paying your rent with cash. Stop paying your bill with cash. Because those are not traceable funds.
Okay.
So in the lending world, no, you can't use that. They call it mattress money, like you hid it under the mattress. You can't use that for a down payment.
Even if you can say this, I put 10% of my check away every month.
It is really, really hard.
Okay.
Because there is no way to trace that that's the same $100, right? The cash is cash.
Okay.
There's no way to trace that. So even if you can show, you'd have to show the slip of you taking it out, and then what you put back into your account, because you can't take the cash to the title company. So at some point, this has to go back in your bank account.
Right.
Right? So the numbers have to line up so perfectly. And even then, it is really hard to get an underwriter to sign off on that. But keep in mind, here's some interesting things also that we didn't talk about for down payment, because we see stuff like this. Did you know you can sell things to come up with your down payment? Sell your motorcycle, get a bill of sale and the Kelly Blue Book to show what it was worth, and make the money line up with that goes into your account. But the money's going to have to go into your account no matter what. Please, please, please stop saving it as cash in your house. For the love of God, get a high yield savings account and put it there and keep it separate. Please stop functioning in cash, everyone. So say you have done that. Say you're the one you ran into.
Yep.
They've been putting the money under the mattress. Okay, fine. We are where we are. Here's the thing at that point. They need to go put it in the bank today. And then they need to wait about 60 days before they can buy a house. The lending world only looks back 60 days, believe it or not. So as much as I say, no, you can't do that, I guess with some advanced planning, you can do that.
So
but
if
put
you
it in
were
the bank.
building new construction and you were 6 months away, you'd be okay?
You'd be okay, but get it in the bank in advance, okay? And then here's another thing to just keep in mind. I don't know how much they're sticking under the mattress. But something that you should know, this is true of all banks, this is true of the mortgage world, right? If we see a cash deposit on your bank statement and we can't show where it came from, which technically you cannot, right? If that amount is $10,000 or more, a federal report has to be filed. So because they're looking for money laundering, they're looking for crime, they're looking for terrorism, right? So part of the anti-terrorism legislature basically made us all watchdogs as banks. So just also, since we're talking about it, if you have $10,000, don't go put in the bank all at once, because you will end up on a report.
Good to know.
Okay, $9,999 is your max that you're going to put in at any given time.
Got it.
All right.
Okay, so other places as far as, so I would say as a first-time home buyer, using either there's 3% conventional, 3.5% FHA.
Correct.
Like that's probably, in my mind, without borrowing and doing the 100% financing, those programs are really good to be able to get into a home, have a little bit of a down payment.
People don't even realize that conventional 3% down, there's a number of affordable housing products that, as long as you're under a certain income rate, and they're actually decent income rates, unlike the grants, which we'll talk about.
Okay.
Like you can make a pretty solid income and still fit into their parameters. You get a deduction in your interest rate. You get a deduction in your mortgage insurance rate. Like you can get a great loan with 3% down if you have good credit.
Okay. Well, let's talk about, I know a lot of people they probably ask all the time, like, grants. Can't I use a grant? Like, where do I get the grant? Where's the free money?
Yeah. And I'm a big fan of free money. And we have had eras where free money is a thing. We've had eras where we managed to get grant money for all sorts of our clients. The reality about grant money right now, there is still some grant money available. Here in Utah, you're going to find most of it in the Provo, Orem area or in Ogden.
Okay.
Salt Lake County doesn't currently have much to work with. The city grants have been underfunded ever since the grant for first-time home buyers and new construction came out. But again, all of them.
Is that one still around?
I believe it is still around, but we haven't seen a lot of people fit into that, because being a first-time home buyer and finding new construction under $400,000 is really tough. Okay. So the thing to know about grants is they have some very specific rules tied to them. They all have an income limitation. most of the city grants, the income limitation is so low that honestly, if that's your income, you would have to have that max income and absolutely no debt to even fit in the box and be able to afford a house in Utah. They have a limitation on debt ratios. So outside of the loan parameters, they have another layer over that where they say your debt ratio can't exceed X. Oh, and Davis County does have one also. Sorry, I left Davis County out. And then they also have limitations on purchase price. There's all sorts of layers to those. So yes, they exist. We will always check. So 100% of the time, if we have a first-time home buyer on our hands, we will always check and see if we can fit them into the buckets. But don't count on that as your plan, because it's not, the number of people who actually can fit into the bucket for each of those grants is pretty limited. So beware.
Yeah. And so yesterday we talked about one on the radio again, like something available because of someone's gender or their race. Like, do you see those very often? I mean,
no, there is one for disabilities.
Okay.
There's also, Utah Housing has a program for single parents. So if somebody is, even if you're not a first-time home buyer, if you've recently been divorced and you're a single parent, there's some things that you can access there. They're not huge game changers. Again, I'll take any free money we can get for a client. There is one for first-time homebuyer veteran in Utah. And then there are several throughout the state for police officers or first responders.
Got it.
Some layers to that.
And then let's talk about, VA loans, because that is one that people can get in with no money out of their pocket. So who qualifies for those? And I mean, those that do, are they aware of kind of
that's an interesting question, because VA loans are for veterans, military service, right? And depending on whether you are active duty or reserves, there's some different year requirements. And we can always help answer that question specifically to any client. Most veterans know whether or not they have eligibility. What they don't know is how valuable it is to them. Do you know that a veteran can get 100% financing with no mortgage insurance at probably the lowest interest rate available?
Wow.
Right? Mortgage insurance, that's $250, $350 a month of your mortgage payment. So think what that does to your buying power. So if you have VA benefits, please take advantage of those.
Right.
We run into this a little bit where lenders will discourage a veteran, which is really unfortunate. And that just tells you that they don't really understand the program. There's nothing harder about that. We also run into scenarios where agents are discouraging veterans.
Why?
There's a perception that a VA appraisal is going to be harder from a point of value or appraised value on the property and or repairs.
Got it.
So let's dispel that, though, because is that really true? Do you think that's true?
Again, I think that's the sentiment, and probably more comes from COVID than maybe, some of the VA appraisers were being conservative. As far as from the repair standpoint, like, hallelujah, sign me up for that, right? My appraiser is going to be the bad guy instead of me asking for the repairs.
And they're just safety and functionality items.
Right.
They're not going to call out anything crazy.
Yeah.
Let's talk, because you said something really important about the value piece and why the perception was the way it is.
Yeah, I haven't had one come in low. Like, I haven't seen that. And I mean, we're doing a lot of transactions and I'm not.
It's not really a thing.
No.
But it is an old kind of narrative. And we did see it during COVID because prices were climbing so steeply, and a conventional appraiser can take into account the listings and the fact that the market is climbing. They can take that into account when they name a value. A VA appraiser cannot. They can only use closed data.
Got it.
So they could not weight the value based on what was going on in the market. That was the only reason you were seeing a struggle there for VA appraisals.
And right now, I mean, when we're looking back, I mean, there's very few areas that are climbing. I mean, some areas are actually going down.
Or at least it's a fairly low level, steady climb. It's not it's not so steep.
And I would say, like, and maybe that was a thing. Honestly, it was a thing with FHA too. But I think that also goes back of FHA usually, it's a 3.5% down. maybe VA, it was 100% financing. And going all the way back to COVID, a lot of the times the sellers were getting cash. And those buyers that had those loans, I mean, it was a signal that, okay, if they're doing 100%, they're doing 3.5%, they're probably not going to be able to cover the appraisal gap should we end up in a position where, you know, there is no appraisal gap.
Yeah.
Versus a buyer that, like, okay, they're doing conventional, they already have 20% down, they have another $100,000 in the bank, and like, I'm so grateful we're not in that market anymore, because it was pricing out some of those first-time home buyers or someone that didn't have $100,000 to cover an appraisal gap. And now, you know, we're actually going in and negotiating rate buy downs and closing costs for the buyers because the market is shifted.
We'll bear that. Yeah. That's a great point.
Okay, what about like rural housing? It's like, okay, I'm willing to commute. I will go live at the other end of the world. Yeah. Like, what's available if I'm willing to do that?
Okay, so rural housing or USDA loans are 100% financing. They don't have traditional mortgage insurance, but they do have a funding fee of sorts. But it's about a third of what you would pay in typical mortgage insurance. So it's pretty inexpensive. The rates are pretty aggressive. Now, the challenge with them comes in underwriting. They are very, very conservative. They're almost all underwriting these days is done by a system, by a computer software, right? Their underwriting system is extremely, extremely conservative. So I will tell you, I have had clients who had 720 credit scores and their total debt ratio was 35%, and that system has not approved it.
Wow.
Right. So you just know on those, like, you have to have really high credit, really low debt ratios. You have to be a really strong buyer for those to approve. But they're great loans if we can get them. Anytime we have a client in that arena, though, we always say, okay, here's plan A, we'll go for it. But you have to be at peace with plan B.
Yeah.
Because we don't want you to fall in love with a house and then not be able to close on that.
Okay. So here's another one, and this one's a little bit just me yesterday, was like, okay, how do I help someone maybe that doesn't have the discipline to save? Or how do we do this, right? To get them a down payment. So here was my thought, and I want to, like, this is honestly just this is crazy thought of, like, okay, that may or may not make sense, right? Okay, but my thought was, like, let's go ahead and, like, we're going to create this 3-year plan or 4-year plan of, like, we know, like, you don't save very well, so let's go buy a car for like 10 grand, make the payments, pay it off, and then in 3 years we're going to sell that so that you have your down payment, and in the meantime you can drive the car. How, like, no?
Okay, well,
does it depreciate way too much for that to work?
That would be my thinking. That, I mean, I
thought you'd like that one. Probably not the best way to get your down payment.
I was going to say, I mean, yes, you could do that, but probably what will you have paid out won't be what your car's worth.
Yeah.
Right. You know, and we do have this conversation with clients all the time, because I would say, like, before you get into buying a house, be sure you can make that payment.
Right.
Especially if that's not, we run into this all the time. And I'm fascinated by this. And I'd love your take on this. We have a lot of people who go to buy their first home. They are living rent-free with family members, and they have no money in the bank. And they want to buy a home. What would your response be to that?
My response would be like, hey, let's try this. Like, let's look at what you would qualify for. Let's make payments into a savings account that we're actually going to have automatically taken out of your account, because when you buy a mortgage, you need to make that payment no matter what.
Yeah.
And so, like, I have a savings account that actually pulls money. Like, I don't have to physically go make the transaction or whatever. Right. It pulls it out of my account. And so I would honestly want to set them up on something like that for 3 to 6 months, probably closer to 6, and say,
absolutely agree.
Let's we're fixing to make a $3,000 payment. That's not like a small amount of money.
Right.
So if we do that for 6 months, not only will you see if you can afford and still live by making that 3,000, at the end of that, you're also going to have 18 grand in the bank that you can put towards a down payment or closing costs.
Yeah.
And so, like, honestly, I would want to, and that's why credit is, why creditors look at credit of like, are you responsible when you borrow money?
Can you
and
maintain that?
and I would like to, obviously, if someone's like, no, I can do it, I'm going to do it. Like, I'm still going to coach them around, like, guys, like, you've got to show me what in your finances you're cutting out then. Like, where are you adjusting your lifestyle?
Yeah, it's hard because we're not actually in charge of people.
Right.
Right?
Yeah.
I say all the time, like, I mom people left and right, but I'm not the boss of people. Yeah. And it's a hard thing because if it were my kid, I'd be like, where's your money going?
Yeah. Even at 2 months, like, I think they'd be able to get a quick feel of like, can I
really do that? Yes, I agree.
Because I think anyone, that first payment, like, anyone's going to be like, okay, paid 3,000, boom, I made that check, right? But then that's when their lifestyle adjustments are going to take place. Okay, did we get through the month? And boom, you have another payment due.
Right.
So we can make the first one and start fumbling through, but then
budget. But then can I sustain it?
Do you have another payment? Like, so yes, you made that.
Right.
You paid all your bills, but at the end of the month you had no money, and it's like, can you make the payment on the next month? So like, minimum, if you're doing the trial period, like, I would say minimum of 2. Ideally, like, honestly, probably shoot for about 6 months.
I agree. And I would rather invest time and energy in helping our younger clients create budgets.
Right.
Practice living in that budget, right? And flex that muscle, because it's just like anything else, right? It's practice. And if you are used to spending everything you make, that is going to be a really hard transition. Right. That's going to be a pain point.
Well, and then if that payment puts you, because of other, living expenses, if it puts you paycheck to paycheck, like, are you willing to make the sacrifice and then continue to make life adjustments to buy the home? And I definitely would recommend doing that, because as we talked about last time, there is no greater way to create wealth off of just being able to buy. And if the only wealth you create is through appreciation, like,
absolutely,
there's nothing else you can do, right? Like, you can create wealth in the stock market, but that requires you to make deposits, in order to get it to start growing. Where a real estate asset, you can create that wealth by staying in the home and paying down the balance. Yeah.
And it's an interesting point, because I have clients, because you hear this story, well, we don't make enough to do that, right? I will tell you, I have a client that we've helped buy a home in the last year. But their first home, they actually were able to prepare to buy one that was high enough price point that they actually have a rentable basement, right? She's a teacher. He's a police officer. They don't make huge money. They still had saved up a $70,000 down payment, and they were young. And I was like, whoa, super impressive. So I would say the reality is we all make choices, right? And you just have to choose where your priority lies in that.
Yep. Any other programs or any other words of advice for someone that, is thinking they need to wait 20 years to make a down payment, to save up?
Don't wait 20 years. That's for sure.
Right.
But, like, who knows what it's going to look like 20 years from now, right? Like, you look at California. Like, what did 20 years do in that market? Don't wait 20 years. But what I would say is find professionals that you trust to coach you and not push you into something that's unwise, right? Look for the people who ask the question of, like, what can you afford? What do you feel comfortable with? Instead of, oh, you can qualify for X, right? What you can qualify for and what you can live with are two different things, right? Let's help people build wealth in real estate. Let's help them build the asset, but also live a life that they love.
Yep. And I love that, because, my recommendation would be sit down with professionals and look at your unique situation and not compare yourself to a study that, is done nationwide, because everyone's situation is unique. The timing, there could be a grant available. You may have parents or someone that would be willing to gift you the money. And so everyone's situation is unique. And so as opposed to just not doing anything, definitely reach out. We'd love to call. We'd love to get on a call, email us, text us, whatever. We just want to help you really start that down the path of home ownership.
Absolutely.
Awesome. Thanks, Mandi.